What's going on, guys? This is Chandler Smith, and in today's video, I want to talk about what the market is going to do next and what you should be doing right now. So with all of that being said, let's jump into it. All right, guys, if you're new to the channel, I've been investing in real estate for the last 9+ years. I currently own over $25 million worth of residential real estate, and I currently have 4 fourplexes and a couple other projects under contract. I'm also in the middle of building my dream home. And so when it comes to real estate, I have a ton of stuff that is up in the air. One of the biggest questions I get asked is, Chandler, what's next? Now, if you look at the news, you're going to see a lot of doom and gloom, and this is for a myriad of reasons. Reason number one, the world is and always will be absolutely crazy. Between tragedy and war and a myriad of other things that always seem to come and go, there's always going to be something that's going to have some form of negative impact on our economy and the economies around us. Second, inflation is at an all-time high. As a matter of fact, if you look at this chart, it shows you that it has gone through the roof, and a lot of people say that these are conservative estimates. Some saying that it should be upwards of 12 to 15% plus when you look at true inflation right now. And a lot of people are feeling that, whether it's the cost of housing, the cost of gas, the cost of groceries. Everywhere you look, pricing has gone through the roof because of inflation. Now, when you look at this little chart, you see it drastically going up. The thing that's kind of scary for me is if you look at this other chart, anytime it drastically goes up, pretty soon it drastically comes down. Now, I'm not saying that's what's going to happen. However, I am saying that there are lots of things at play, hoping that will be the result. This leads us to the next topic, which is interest rates. Now, interest rates have been historically low for what I would say is a pretty long time. And for those that have capitalized on these extremely low interest rates, they've been able to go and buy properties with what I would say are pretty low cap rates, but extremely high cash on cash returns because they're able to lock in extremely low interest rates. And a lot of times people are looking and they're just buying according to cap rates, but real estate investors that have been capitalizing on using leverage in these extremely low interest rates and locking them in for long terms have absolutely crushed it during this period. Now, that has caused pricing to go through the roof, and I'm sure that low interest rates have had a big impact on the inflation that we've had. Now, I wouldn't say that would be the major cause of this inflation. However, low interest rates just give companies and individuals so much more buying power. Now, alternatively, right now, we are seeing interest rates go through the roof. For example, in 2021, a 30-year fixed on a single family home was 2.96 on, that's a 30-year fixed. On a 15-year 15-year fixed, you were as low as 2.23. And with an ARM of 5 years, you were looking at 2.55. Those are so absurdly low, especially when you compare them to the historical data. I mean, if you look back, you can find times where interest rates were as high as 8, 10, 12% in the United States, and even higher than that. And so to get down to a 2.96 on a 30-year fixed, that's absolutely insane. And knowing that it was just a little higher than that for you to purchase 4 units or less, it's just nuts. Right now in 2022, and it's even gone up since this data, but a 30-year fixed is at 5.23, and I think even pushing 6% now. A 15-year 4.38, and a 5-year ARM at 4.12. So you look, and on an ARM, you are more than double the interest rate of a 30-year fixed when rates were down lower. You can imagine this is having a drastic impact on buying power. Now, if you look at this chart that I am looking at, it talks about the median sales price of housing sold in the United States. And you can go back as far as 2011, and you just see this gradual upward trend. You see us level out for a little bit, and then you see it just absolutely explode in 2020 to the present. And surprisingly, a lot of the home pricing right now, at least, is holding steady. But when you look at how drastically it's gone up, it has been insane that housing prices have gone up as much as they have, especially the last couple years. So if we take a step back and we say, okay, we've got inflation going crazy, we've got housing prices going crazy and still pretty crazy, we've got interest rates going crazy, but people are still willing to pay these asinine prices right now, even though interest rates have gone up drastically. A lot of people are predicting that that's going to change. And you can see some shifting, but from the data that I looked at, even in some of the tier 1 markets, and we'll show you this graph right here, they have still seen that home values are holding extremely high, even with these interest rates. Now, when you look into refinances have dropped drastically, and that makes sense. But when it comes to people applying for financing, they're seeing that starting to drop a little bit. When you look at inventory, you're also seeing that we have a lot more inventory than we did a month ago and even 2 months ago, but also you see that in the summer. And when you look at this chart, it's very interesting to me because when you compare our inventory right now on houses that are for sale compared to 1 year, 2 year, 3 year, 4 year, 5 years ago, we are still really low compared to what maybe we should consider normal. So now you're in this weird situation where we have done drastic things with interest rate and also drastic things with inflation, and overall our inventory was so drastically low that it's going to take a long ways to catch up to where normal inventory is in play. Right now, everything is an extreme. Inventory has been at an extreme low and it's going to an extreme high. Interest rates have been an extreme low and they're going to an extreme high. Property values have not necessarily been an extreme low, but they continue to hit extreme highs. Inflation continues to hit extreme highs. Anytime there is an extreme in this direction, I feel like there's usually somewhat of an extreme back in this direction at some point. I'm not saying that housing prices are going to get catastrophic on us, but I am saying with how massive this spike has been, and then you take into consideration that historically appreciation has been 3 to 5%, and in some markets we've seen as high as freaking 20% appreciation, you have to realize that isn't normal and there has to be some form of correction. Now, the part that I'm walking on eggshells a little bit is I don't know how drastic that's going to be because we've also never seen inflation to this degree or government spending to this degree that's caused that inflation. And that's something that's always going to be beneficial for real estate pricing. One of the reasons I don't know the right way to call it right now is there are so many unordinary extremes that are happening in our market. And I don't think anyone completely knows where these extremes are going to leave us. However, there is one thing I know to be true, and that is that people will always need housing. It's also that if interest rates have gone through the roof and housing is through the roof, that tells me there are going to be a lot of people that don't have the buying power to be able to continue to build housing and purchase housing like they've been able to. Which means if they're not buying or building, most likely they're renting. And with inflation and everything that's going on, it makes sense that rents have gone up. It also makes sense that they probably aren't going to come down if people can't go and get into homes. Now, the one worry you have in this situation is, well, what if you overbuild multifamily real estate? Or what if you overbuild any form of replacement for what people are renting? I just don't see that happening, especially in my market, because right now we have such a shortage on housing. And that's one of the things that really has caused the inflation. Now, it's not the big thing, but it's one of the things is we just haven't built on track with the housing that's needed, because I do think a lot of people have been playing scared. Now, there is a lot of building going on, but in my opinion, you're not in a place where you're going to have too much housing to where it's going to affect rents. And that's what I see affecting rents, unless the whole population as a whole just can't afford rents and somehow that causes problems. There are a ton of extremes like we've talked about, and anytime you have extremes, you have fear. And anytime you have fear, you have opportunity that can be capitalized on. And that's why right now I have 4 properties under contract, all of which I was able to get under contract at an extraordinary price because the seller had fear. In their mind, they're seeing interest rates go up. They're thinking, hey, I wanted to unload this property soon because I wanted to retire. And they're thinking, man, I've got a buyer here that can give me something where I'm going to make a ton of money. These are people that picked up these properties for literally a half or a quarter of the price they're selling them to me. And I'm buying them at a massive discount compared to what I think the market demands right now. Anything on the MLS, multifamily real estate wise, is still going for a premium. And the same goes for single family. Now, I don't know how long that's going to hold with what interest rates are doing, especially knowing that interest rates are only going to continue to go up over the next couple months. And so once again, all of these extremes have caused a lot of fear, not just for sellers, but also for buyers. There are lots of people that really wanted to buy a home that are saying, crap, I miss good interest rates, but also interest rates are only going to get worse. And so if we want to buy a home, we need to buy now. I can see that working to your advantage, not as much as motivating sellers. What I came to find is when I'm not competing against other people and I get off-market deals and I build up the fact that, hey, interest rates are going up, I've already lost a ton of buying power. I would have paid this for you even 2, 3, 4 months ago, but I just can't. I need you to come down to here. And unfortunately, if you wait another 1, 2, 3 months, my rates are gonna get worse. I'm gonna have even less buying power. And using that as a tool, capitalizing on this fear to be able to get extraordinary deals is something you have to do. Everyone looks back to 2008 and they say, man, I'm just waiting for another 2008. I'm waiting for another massive crash. Could a massive crash happen? I personally don't think like 2008. I could be wrong though, but I don't think so. I think we're gonna see a correction, but I think it's going to be small, and I don't think it's going to have this massive impact on the rental market. As a matter of fact, I think it might even be beneficial for the rental market. But even if I'm wrong and it is more drastic, I'm telling you, this fear phase is going to be a great opportunity for you to pick up great deals. Last thing I want to throw in here, looking on the MLS, you might be able to use this to your advantage a little bit. But in my opinion, when there's competition, that gives people confidence to hold to their price. And when they're using a realtor's goal is to help and keep people from being emotional. Now, they don't always do a great job of that, but the combination of those two things a lot of times may make it hard for you to capitalize on fear when properties are on the MLS. It can still be done, but it's a little more difficult. That's why for me, all of the deals I'm finding are off market. These are the people that are very emotional. They don't want to use a realtor. They don't want to give up that money. When you can say, look, I know you got this for a killer deal. You most likely have this property paid off or massive equity in it. And right now with what interest rates are doing, it's getting worse by the day. These are the deals where you can absolutely crush it. Now, a lot of you are saying, Chandler, what if I don't have the means to find good off-market deals? That's why I've put a link down below for you to connect with Ballpoint Marketing and Ryan Dossie. This is how I found all 4 of the deals I currently have under contract, and their process is absolutely incredible. Don't take what I'm saying the wrong way. Don't go and buy real estate just to buy real estate and buy at market, because that is very not smart right now with interest rates and with where the market's at. But if you can use this fear to capitalize on it and leverage it and get an incredible deal on a piece of multifamily real estate, then I think you will not regret that 6 months, a year, 5 years, 10 years from now. And if you capitalize on it and the market does correct and it ends up being not as good of a deal as you thought, well, guess what? Then you're watching the market and then it really is correcting, and then you need to send out more mailers and connect with more off-market deals and continue to buy through that dip, because again, as you buy through the dip, you're gonna be the person that won. The people that are waiting for the bottom of the dip, whatever it may be, they're usually the ones that aren't going to win because they're never going to hit on that, and they're not even gonna know what it is. That's what's hilarious to me, is a lot of times people will say, oh, I'm gonna wait. But even in 2008, 2009, there were people that were buying crappy deals because they didn't know what a good deal was, because they weren't in the market actively looking and actively purchasing. Now, if you guys enjoyed this video, make sure to remember to smash the like button, subscribe to the channel, and hit the little bell, and we'll look forward to seeing you in the future videos. Thanks, guys. Have a great day.